Hey traders, welcome back to this week's weekly Forex forecast. Last week was a big week with a number of interest rate decisions, and we have 3 more interest rate decisions coming up this week. We have the big one, FOMC on Wednesday. We also have the Bank of Japan just after on Thursday morning. And then we also have the Bank of England on Thursday. And in today's video, I'm going to show you not just the best setups that I'm going to be looking at going into next week, but also how I'm planning to trade around those interest rate decisions. Okay, so let's have a look at the portfolio selection then for the coming week. Just very quickly before we do that, there are going to be no videos next weekend because the week after that is Christmas week. So no weekly Forex forecast, no weekly stock forecast videos next weekend. Just keep that in mind. Coming into this week, to the long side, it's really just the US dollar that sits quite strong at the top of the rankings here of these currencies. And to the downside, it's a little bit more clearer because we still have the New Zealand dollar as the #1 short. We still have the Aussie very solidly #2 as a short. And the third one we can look at here to the downside as well is the Canadian dollar. So for sure we want to look at the dollar pairs. And the dollar pairs I'm only going to be trading most likely from Wednesday onwards after FOMC. If we get opportunities in the dollar pairs straight out the gate on Monday, could be a good opportunity to take them and then close them out before FOMC. But as the week progresses, you get to Tuesday and then into Wednesday, there's a good chance that the dollar pairs are only going to start to move after FOMC on Wednesday. So just keep that in mind. You may need a bit of patience next week. We always need patience. Patience is the biggest virtue in trading, but might need some with the dollar pairs heading into FOMC on Wednesday. So certainly to the downside, these 3 currencies, and what's noticeable is they're all commodity currencies now. This is quite risk off, even though the actual equity space is pretty risk on at the moment. So we are starting to see a little bit of risk off coming into the Forex universe, but it's not major. We don't have overall risk off. And actually in the equity space, I am still looking to be long equities, but that's for a different video. And coming into next week then, we need to pay attention to, of course, FOMC on Wednesday, but also the euro. The euro is kind of neutral, unlike the dollar, which is green and also green here, and it's getting stronger. It's neutral and getting stronger. So I will also be looking at the euro to the long side. So we'll be looking at EurAusd to the long side, Euro New Zealand dollar to the upside, EurCad to the upside, as well as, of course, US dollar CAD to the upside, Aussie dollar to the downside, New Zealand dollar to the downside. And the third currency, really between the pound and the franc, I'm going to go with the Swiss franc to the long side this week because we have the Bank of England on Thursday. So I'd rather sidestep that and go into the Swiss franc, which we've already had the interest rate decision. We did get the 50 basis point cut, but relatively speaking, it is still holding up, and I am looking for Swiss franc longs next week, primarily versus the New Zealand, the Aussie, and the CAD. So those are the pairs we're going to look at in today's video, and I'll also show you exactly how I'm going to be looking to trade the FOMC with the US dollar pairs on Wednesday. Okay, so kicking off the watch list, as always, with crude oil. And again, we're looking at, with the blue levels here, the projected weekly range in all probability. And if we start to breach these levels, you become overbought and oversold during the week. And the gold range here is where we become extremely overbought or oversold should we breach these levels intra-week. And what I'm personally looking for, what I'm doing with GMT members, and last week we didn't have any losses in the GMT members area. I think I posted about 7 setups. We're looking to fade primarily moves from above and below these levels because that's where the odds swing in our favor for the market to reverse back inside the range by the end of the week. So all of these setups that we're looking at in today's video, this is exactly the same thing I'm trading in real time, all time stamped with GMT members during the week. So what I want to see in crude oil, now crude oil is a choppy market. I don't have a very strong bias on it one way or the other. On balance, I have a bullish bias on balance, but it's neutral. It's bullish to neutral. So this is a market you could probably either short from the upper bound or buy from the lower bound, but I'm going to primarily be looking for long opportunities should I get them next week. We've already had this kind of reversal breakout. You can see this down here. Here's a low. Here's another attempt at a low, and we kind of break here. This is somewhat of an inverse head and shoulders reversal. It's not very clean, but it does take, you can see the right shoulder test the left shoulder. So it is quite textbook, but it's also, this shoulder down here is quite small compared to this shoulder, but it doesn't really matter. The point is that the psychology has changed in this market, and now we're starting to see buyers come in. So on balance, I favor long positions in crude oil next week. What I'd like to see is I'd like to see crude oil coming down, taking out the lower bound at the 69.33. This is where I'm going to drop down, start to look on lower time frames for momentum to fade, start to look for those bullish reversal patterns. So again, inverse head and shoulders, but instead of on the 4-hour chart here, you know, 15-minute, 5-minute, double bottoms. And I'm looking for this to snap back inside the range by the end of the week and looking to capture 1 to 2 days worth of reversal. Sometimes you're just going to get 1 day's worth of reversal. And that's really what we're looking to capture, 1 to 2 days worth of movement out of 5. So that's what I see in crude oil. That's what I'd like to step in and take the opportunity to buy should we get down here. If we blast all the way down to the 67.58, you know, I may already be long and just risk managing this, but this is the second place. Whether I'm long already and risk managing it or not, this could just be an initial position, you know, if I haven't got long here already. This is the second place I'll be looking for a long opportunity to the upside. If we breach the 67.58, we turn extremely oversold intra-week. We should, in all probability, snap back at least for a day or two. And the third and final thing you can look for is, as always, if you do like to trade stuff intra-week between the levels, you can look for the momentum breakout. So it breaks down below the moving average. It then breaks back above the moving average, and then it comes in and hugs the moving average like this. And that is when you get that push away. That's your bull flag setup in this case into the upper bound at 72.84. Great profit taking target next week in crude oil. Okay, so kicking off the Forex universe with New Zealand dollar and the dollar pairs. So we do have FOMC on Wednesday. I will look for these opportunities before Wednesday, but if nothing really happens, very often these markets chop into big interest rate decisions and just go nowhere. Then I'm going to be looking at trading FOMC in a very specific way, and this is as follows for all of the dollar pairs. If we get a neutral outcome, so we get an outcome and we reactively just see the dollar not doing too much, you can pretty much just treat this as a normal setup. So in other words, I'll still be looking for the market to pull back, breach the 0.5842 in this case, and this is where I'll start to drop down to lower time frames, look for those reversal patterns to the downside for a 1 or 2 day liquidation. Should we get a very bullish response from the US dollar after the interest rate decision on Wednesday with FOMC, then what tends to happen is you get the market chopping around, it's not doing too much, and then you get the sell-off in this case because, you know, the New Zealand dollar would go down hard versus a strong bullish reaction from the US dollar. Now, in this situation, you're not likely to go all the way down to the lower bound in one go. What tends to happen is you get a sell-off and then it pulls back and you get this kind of hugging of the moving average and you get a follow-through setup into, in this case, the lower bound down at the 0.5683. So very much just like that kind of bear flag intra-week setup we look at really in every weekly Forex Forecast video if we're looking at something to the downside. It's the same thing, it's just that the initial sell-off is catalyzed by the interest rate decision. And the third and final thing is if we get a very, very, very weak dollar because for whatever happens, let's say they cut 50 basis points unexpectedly and we see the US dollar blast through the first upper bound and make its way all the way to the second one, above the 0.59214, especially if we take out this high, you see a nice prior low over here as well, kind of retesting. This would be where I'd be dropping down also to look for a 1 or 2 day liquidation back inside the range, even if we get a very weak US dollar from Wednesday and this ends up blasting all the way up. So regardless of FOMC next week, I can only be long the dollar. I cannot be short US dollars next week. And if we end up with a weak response from FOMC, it is the second upper bound here that I'll be looking for a potential 1 or 2 day liquidation to the downside. Now, this setup is exactly the same as I'm going to be looking at for the other US dollar pairs as well as we go through the video. So next is Aussie dollar. So exactly the same as we just looked at in terms of setup. What I want to see is I want to see this market coming back. And if we have a kind of neutral outcome, I'll be looking for the upper bound. You can see prior lows over here, really nice area where we can kind of stair step. We've traded into this before. Look at this. We pull back, we trade into these lows and we sell off. We trade into them, we sell off. So if we pull back, trade into these lows again above the 0.64370, this is where I'm going to be looking for reversal patterns on lower time frames for a 1 or 2 day liquidation back inside this range. If for whatever reason we blast all the way through and we get a very weak US dollar and it pushes the US dollar all the way, or in this case Aussie US dollar all the way up to the 0.6513, this is the second place above this level that I'm going to start to look, because we've become extremely overbought during the week. So I'm going to start to look for a 1 or 2 day reversal back inside the bigger range here, this gold range. And the third and final thing is we just chop about, which is very likely, into FOMC, and we get a sell-off in Aussie US dollar, which of course would be a stronger US dollar from FOMC. Then you can drop down, you can look for that bear flag setup as it pulls back into the moving average, moves away, down to the profit taking target next week at the 0.6285. I can only sell Aussie dollar next week. I cannot be a buyer of this market regardless of FOMC. Next is US dollar CAD. Now I can only be a buyer of this market. I cannot sell it next week regardless of what happens on FOMC. If we start to get US dollar CAD selling off and we get, a neutral outcome from FOMC, not too much happens. They cut 25 basis points, it's expected, and we just get US dollar CAD kind of moving fairly slowly down towards the lower bound. Below the 1.4123 is where I'm going to be looking for bullish reversal patterns on the lower time frames for a 1 or 2 day liquidation back inside this range. If we blast all the way down to the 1.4012, now it's not expected that you're going to take out these gold levels during the week, but it does happen. And usually it happens on a catalyst like, FOMC. So why would the US dollar CAD pair come all the way down to here? It'd have to be a very bearish outcome from FOMC. Maybe they cut 50 basis points or whatever. Now, if that's the case, I'm still only going to be looking to be long, but below this level is where we become extremely oversold during the week. So it's where I'm going to be looking for a second opportunity potentially, whether I'm long already or not, for a 1 or 2 day reversal back inside the bigger range before the end of the week. And the third and final thing, of course, is we just chop around and you get that kind of choppiness into Wednesday, and then you get the big rally off of FOMC. You guys, I'm sure you've seen this many times. You get a big move off FOMC, it then starts to consolidate, and then you get your follow through trade, in this case, into the upper bound at the 1.4347. Great profit taking target to the upside in US dollar CAD next week. And the final dollar pair we're going to look at is euro dollar. Now, we cover euro dollar every week, so I don't think this is the best market. I like the other dollar pairs we just looked at more. However, on balance, I am bearish on euro dollar. That means that I'm only going to be looking for short opportunities. It doesn't mean, as some people think sometimes, that this can't go up. If I'm bearish on euro dollar, it means I'm just only looking for short opportunities. If euro dollar pushes up to the 1.0605, it means I'm looking to short it above this level. If it pushes up to the gold level, it means I'm looking to short it above this level. It does not mean that it cannot move to these levels. Being bearish means I'm only looking for short opportunities. Doesn't mean that euro dollar can't push higher. In fact, I want that to happen because then I can fade it, I can short it in the other direction. So we're going to be looking at this exactly the same way as the other dollar pairs and as I do with all kind of interest rate decision setups. If we get a neutral outcome, I will be looking for this to kind of move higher, push into the 1.0605, especially if we can take out this high as well. I like it when we turn kind of overbought during the week. We enter the sell zone, between these levels, and then we trade into a resistance area. That's a great opportunity to start to look for those reversal patterns and a liquidation, because buyers get trapped and then they start to pull their positions and you see it liquidate for 1 or 2 days in the other direction. The second thing then is if we blast through there and we take out the 1.0708, this is where we become extremely overbought intra-week. So it's the second place I'd be prepared to pull the trigger on a short opportunity in euro dollar. And what would it mean if euro dollar blasted higher? It means we have a very weak outcome from FOMC. If, on the other hand, we have a very strong outcome for the US dollar, what that's going to see is it's going to see euro dollar chopping around, and then you get that sell-off on FOMC. The moving average follows very much like this. There's a big sell-off, and then look what happens. It pulls back into the moving average, hugs it, moves away. So you can look for that bear flag setup down to, in this case, the 1.0400. And if you get a very strong bullish catalyst from FOMC, you could very easily see the second level taken out, because these gold levels often get taken out only on catalysts, either expected news events or unexpected news events. So that's what I see in the dollar pairs going into next week. Either way, I can only be short euro dollar next week. I cannot be a buyer of euro dollar next week. Okay, so moving on to the Euro pairs and starting with Euro New Zealand. So Euro New Zealand, my favorite of the Euro pairs because the New Zealand dollar short theme is one of my favorites again going into next week. If I can get hold of any New Zealand dollar short positions, these are going to be my primary go-to setups next week. So going into next week, if we can pull back and breach the 1.80270, and also if we could test this low. So a place where in the past we came down, we tested and we bounced, that would be great. If we could breach this, test this low, this is going to be a place I'm going to start to look for bullish reversal patterns on lower time frames, just looking for a 1 or 2 day reversal to the upside, back inside this range. If we blast through there and take out the 1.7825, this is the second place, although it's unexpected that we would take this out and it would be the sign of a much bigger reversal. Should we take this out, this would be the second place. I'll be dropping down looking on the lower time frames for bullish reversal patterns for a 1 or 2 day liquidation back inside the bigger range. And the third and final thing, as always, if you want to look for that kind of choppy correction consolidation during the week and then you get the momentum breaking out in the direction that we're looking at to the upside, the moving average follows it, pulls back, hugs the moving average, moves away, in this case into the profit taking target, the 1.84310. Next is EurAusd. Now EurAusd, the same as Euro New Zealand, I would like to see it primarily coming down, breaching the lower bound, in this case at the 1.63230. And if we could come and test this prior high, so we stair step it, prior high over here, consolidation would break through, we come back, we stair step it, not this, this is just where the spreads widen on your brokerage platform. We see this here as a wick. But as we come down and retest stair step the prior high, this is going to be a great place if we can get this next week to drop down, look for those bullish reversal patterns for a 1 or 2 day liquidation higher. If we come all the way down, and I don't expect this to happen, but if we do break through here and we end up taking out the 1.6136, something has happened. We've either had a very bearish Euro catalyst, probably unexpectedly, and we'd just be risk managing it. But if we did come down, take out this lower bound, as unexpected as it is, this would be the second place below the 1.6136 that I'm going to be looking for a 1 or 2 day reversal to the upside. And the third and final thing, again, you can see we're already chopping around the moving average and we started to break up. So you may even just see this continue to push higher like this, and the moving average follows it because you've already broken back above it. And then look for that first pullback intra-week. And usually you only get one of those kind of bull flag setups in the 4 hours during the week into the profit taking target, in this case of the 1.6695. And last but not least, we have EurCad. Again, I'd primarily like to see this coming down and breaching the 1.4834. We turn oversold during the week. We enter this buy zone down here. And at the same time, we'd be taking out a prior low. So that would actually be a really nice setup. That is where I'd be dropping down, looking for a failed breakdown below this low, looking for those bullish reversal patterns, and then you get the liquidation for a 1 or 2 day reversal back inside the blue range. If for whatever reason, as unexpected as it is, we drop down all the way to the 1.4714, we start to take out these lows over here as well, and you can see there's a low right here. This is going to be the second place below this level that I'm going to be looking for a 1 or 2 day reversal to the upside. Whether I'm long from around here already and just risk managing it and it pulls back, scratch a break even, did a couple of those last week in real time with GMT members. Exactly what we're looking at here. Breaches the second lower bound, add to it, pulls back, and then you scratch it for a break even. And that happens a lot. I take a lot of scratch trades. Usually if trades don't work straight away for me or they don't work very quickly, I usually just pull that position and move on to another one. I like things to reverse pretty much, almost immediately when I get involved in them. If they don't, then I usually scratch it and I move on to another one. Because there's always another opportunity. There's always going to be another trading opportunity. So if you get involved in something and it's not really moving, get out of it, move on to the next one where you can get paid pretty much straight away. And the third thing you can look for here is we've already started to break up above the moving average again. So look for this just to continue. Look for this to continue into the week. You could see this pull back, flag into the moving average, and then move away into, in this case, profit taking target to the upside. The top of the range is the 1.5073. Okay, so wrapping up the Forex universe with the Swiss franc pairs, starting of course with New Zealand franc, my favorite of the Swiss franc pairs if we can get it next week. What I'd like to see is I'd like to see New Zealand Swiss franc pushing higher, taking out the upper bound at the 0.5219. We then enter the sell zone. We become overbought during the week, especially if we can push through here and start to take out prior highs. This is going to be a good place to start to look for bearish reversal patterns on lower time frames. Simple stuff, head and shoulders, double top, don't overcomplicate it. Just look for those standard reversal patterns which happen again and again and again. And we're looking for a 1 or 2 day liquidation back inside the range next week. The second thing is, if whatever reason, as unexpected as it is, we blast through and take out the second upper bound, the gold one at the 0.52940. Above here, we become extremely overbought, and this is where I'm going to look for a second potential opportunity, whether I'm already short from down here or not, for a 1 or 2 day liquidation back inside, in this case, the bigger range. And the third thing you can look for is we're already above the moving average. Look for it to track back, to correct, and then you get that breakdown in the direction we're looking for. The moving average follows. You get a pullback, consolidation. You get that bear flag set up intra-week, so during the week, down to the profit-taking target here at the 0.5069. Next is Aussie franc. I can either be short or do nothing. Buying this market is not an option for me, very much like New Zealand franc. I'd like to see it continue higher. We've already broken above the moving average, and now we're starting to kind of correct, but I only view this as an opportunity for a potential reversal. You can see we kind of had this double top over here. We reversed, consolidated the low, and then we broke through. So I'd like to see this pull back. Breach in this case is 0.5760. Really nice highs over here as well on this breach. So if we do take this out, not only do we enter this sell zone between these two levels where we can start to look for short opportunities, reversal patterns to the downside, but we trade into some significant highs over here. So this is going to be a great place to look for a 1 or 2 day reversal to the downside should we take out this level. If we blast through there and get all the way to the other side of the sell zone and come out the other side, this would be the second place. Although it's not expected, this would be the second place. You know, as a plan B, we have to have our options open. This would be the second place above here. I'd be looking for a short opportunity for a 1 or 2 day reversal inside the bigger range. And the third and final thing is, because we're already above the moving average, again, look for this just to continue to correct, consolidate. Maybe it fails at the prior high. You know, the moving average comes up, it's failing at the prior high here, and then you get that double top reversal intra-week. Starts to pull back, starts to flag, the moving average inevitably follows, and then you get that bear flag set up down to the lower bound, in this case at 0.5599, and right into the prior low. So a really nice profit-taking target to the downside there. And the final franc pair then, CAD franc, before we move on to gold and silver. Really nice head and shoulders reversal. Look at this. Sells off, liquidates, we struggle to make a new high, and this becomes the right shoulder as we break down with momentum. So what I'd like to see is, I'd like to see this come back up, retest the top of the right shoulder. You see this quite often, especially if we breach this and take out the left shoulder. That's always a good textbook opportunity to look for an entry. So we take out the, in this case, 0.6337. And if we push through here and take out the left shoulder, look for a potential reversal around that level, because now we're in the sell zone and we're trading into the left shoulder over here. And this represents a nice resistance area in this case. So this would be a great place to start to look for bearish reversal patterns for a 1 or 2 day liquidation back inside the blue range. If we continue higher and we take out the second upper bound and the prior high, this means we've had a bigger reversal. This pattern, this reversal pattern has failed. And it means that we are potentially looking at a bigger trend change, but you know, probably over the next couple of weeks. So it's unexpected, but if we do take out the 0.6403 reactively, I'm going to be looking again for a 1 or 2 day sell-off to the downside, whether I'm short from over here and risk managing it, or this is an initial position. And the third thing, just like with the other markets we just looked at here with the Swiss franc pairs, if we start to pull back and we start to fail, and then you get the break back down below the moving average because we're already above it, look for it to turn and look for the pullback into the moving average and the turn away, you know, to the upside here. Pushes higher, pulls back into it, moves away. There's your bear flag setup. If you can get it next week down to the lower bound at the 0.6204, but in this case, I would expect it to also come down and test the prior low. So a good profit taking target next week would be the low that sits right in the profit taking zone down here between the two levels. Okay, so wrapping up the video with gold and silver, and gold actually sold off really nicely above its upper bound last week. I didn't catch this one, but it did reverse very nicely. And going into next week, because I have a bullish bias on the US dollar, I do on balance favor gold and silver shorts. They're not my favorite setups, and if we get a rate cut on Wednesday, we could actually see a little bit of weakness in the dollar. So just bear that in mind, but on balance, I am going to be looking for short opportunities only in gold and silver next week. What I'd like to see in gold is I'd like to see it come back and trade above its upper bound again, just like it did last week, traded above the upper bound, and then it liquidated. Look at this liquidation we saw at the end of last week. This was back inside the blue range, which I highlighted in last week's video. So I'd like to see that again. If we do breach the 2698.53, this is where we enter the sell zone. And this is where I'll be dropping down, looking for a 1 or 2 day liquidation given the opportunity. If we push all the way through into the 2748.55, this is the second place, whether I'm short already or not, that I'd be looking for a 1 or 2 day reversal to the downside. And again, if we do take this out, this is probably a continuation of the overall trend because we're making a new high, probably going to actually come and test this high if we do take this out. So it's not expected, but in the event we do, that's the second place I'll be looking for a potential short. And the third and final thing is we're already below the moving average, so you may just find that this actually sells off, starts to hug back inside like this into the moving average, and then you get your bear flag set up in this case down to the lower bound at the 2598.48. And last but not least, we have silver, another market where we saw a really nice liquidation. Look at this double top, takes out the prior high, fails below here with momentum. So if we can pull back next week, what's really nice about this is we would be testing not just above the upper bound at the 31.62, but also trading right into the bottom of the silver double top breakout here, right? So we break down, we pull back, we stair step it, and this would be a great place to drop down. Look for those bearish reversal patterns on lower time frames, double tops, head and shoulders. Here's a double top right here. So what you're looking at here, fails, breaks down with momentum, exactly the same thing, but on the 5 minutes, you know, on the 15 minutes, dropping down once you start to enter these sell zones and these buy zones. So the second thing I'll be looking for is if it blasts through there, as unexpected as this would be, if it does take out the 32.67, this means probably again, we're starting a trend to the upside. It's the second place next week. I'd be looking for a potential 1 or 2 day liquidation, whether I'm short from over here already or not, you know, just risk managing it, or if it's an initial position. And the third and final thing, you've already had the breakdown. Look at this, you've already had the breakdown with momentum. So you can look for this to pull back into the moving average pretty much straight away next week and turn away. And that's where you get your bear flag set up in this case, just like this, breaks down below it, hugs it, sells off, pulls back, hugs it, sells off. That gives you your bear flag set up into the 29.51, great profit taking target to the downside next week in silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.